what markets have been pricing is a breakthrough. And to be fair, there is, as a matter of fact, a political will now in Brussels and also in London to get a Brexit deal done. However, we should be aware about the hurdles that are still to overcome. And you just mentioned one hurdle. So the sticking point of the DUP remains that the Irish Sea border, and let's see what comes out here. So if an orderly Brexit that has been priced by markets apparently, and particularly with sterling, if that is really materialized and those hurdles are overcome, then this will be a situation that is more benign for the domestic economy also in the UK. And it would rather be the FTSE 250, which comprises a lot of domestic stocks that could benefit in this scenario, than the FTSE 100, because the FTSE 100 would then be dragged down by a stronger sterling. A lot of international earners are part of the FTSE 100.
And I suppose, Anne-Catherine, the standard wisdom is that UK stocks have been undervalued for a long time. So it's always the moment you jump in, but not necessarily right this second.
I think I would wait for more visibility, so for things to become clearer. As the past has shown, a lot of twists and turns can happen on short notice.
Where's fair value on cable, Anne-Catherine? Somebody yesterday told me it was 137. We've had strategists saying if we get a deal that gets through Parliament, a lot of ifs there, we go to 140. No deal, we go to 111. But where's fair value?
That would be a range that I think can be realistic, but fair value could be around 130. I would agree to that. But let's not forget that sterling has rallied already. So in order for it to rally even more, in case of a benign scenario, what we would need is really tangible progress. So we would not only need an agreement between the UK and Brussels, but also the ratification by the UK Parliament.
And, I mean, all this obviously takes place in a European context. That's the other aspect of this, and it's coming up for some very interesting times at the ECB. Many things to talk about, not least because it's a week to go before Mario Draghi has his final policy meeting. And I guess, obviously, Brexit's a factor in there, but also all the latest data that comes through on the German economy particularly. I mean, how do you see Brexit playing into that particular debate?
Well, it's not a secret that the European economy has struggled, and the Eurozone economy in particular has weakened. So this is one of the major reasons for the dovish turn of the ECB. Now, next week's meeting, I think, will rather be a meeting where Mario Draghi will reflect upon his 8-year term. And in terms of monetary policy news, there will probably be only little news. So the crucial next meeting for the ECB will be the December one, where the new macro star forecasts will be released. And this is precisely the time when we will already know whether Germany has fallen into a technical recession, when we will know the Brexit outcome, presumably, and when we will also know and when we will also know whether the US administration decided to impose tariffs on EU-produced cars. So all of these stumbling blocks or these uncertainties might have been clearer by then. So that will be the crucial meeting.
So the two big uncertainties that a lot of people say to me have been weighing on Europe: one, Brexit, and two, what you've just pointed to, the trade war. And with the prospect of those two improving, going away, however you want to frame it, now's the time to actually move into European assets a little bit more. You've had a preference for US equities for quite a while. Are you starting to think about shifting that preference towards European equities based on what we're hearing on Brexit and trade?
Two things. I think, first of all, we need clarity on these factors, of course. Secondly, you're right, it's been an unloved, under-owned market, not just the UK, but also Eurozone stocks have been the consensus underweight this year. So we think that for investors with a longer-term horizon who also want to benefit from the high and juicy dividend yields in the Eurozone, this could be a good starting point once these stumbling blocks have gotten out of the way.
But you are obviously keen on US equities, or you have been. What about the data that's come out most recently from the US, the consumer data? Because one of the things we always say, oh, well, everything's fine as long as the US consumer is there. And there's a little bit of weakness there. I mean, is it giving you cause for doubt?
Well, that's a big question, not just in the US, but also in the Eurozone and elsewhere, whether the consumer will continue to be resilient. In the US particularly, for the time being, the consumer is still holding up quite well. And I think also the bank earnings reports this week were quite interesting in that respect, because those banks that fared well, that still prosper in this more difficult, challenging environment of lower yields, were those that also had a strong consumer business. But no doubt, looking forward, what we continue to watch is whether there will be a spillover from the weak manufacturing, trade-related, export-oriented side to the consumer, coupled with simply the fact that given that the US cycle is matured or finds itself at a matured stage, at some point in time employment growth will weaken further. This is a natural effect as the cycle gets older. So less support from the labour market might be another drag on the consumer.
Yeah, that distinction actually that you've hinted at, Anne-Catherine, I found really interesting too, with the fact that the consumer was so strong in the bank earnings, but then we had that surprise drop in US retail sales yesterday, and it did hit the market a little, the S&P 500 falling. Also, of course, the Fed's beige book, it didn't help, but it also pushed the dollar a little weaker. Does the dollar need to move lower from here?
Well, the dollar is clearly overvalued fundamentally, but for the time being, as long as other central banks are also shifting into a more accommodative monetary policy stance, and as long as risk aversion remains high, the dollar might continue to hold up well despite the fundamental overvaluation.
All right, Anne-Catherine, thanks very much indeed for that. Anne-Catherine Peterson there, investment strategist at Allianz Global Investors, talking to us about the weaknesses that are there, well, in lots of areas, and the uncertainty, of course, which still exists very much, of course, in the European sphere, as we've been talking about. We'll have more live coverage of that EU summit in Brussels, which, of course, is very much informing that debate, as the chances of a Brexit agreement are put into fresh doubt by that latest statement from the DUP. This is Daybreak Europe. This is Bloomberg.
In today's volatile markets, investors...
1 in 10 Londoners surveyed said they'll give more to charity in the next 12 months. Are you one of them? At CAF, we help generous people like you support their favourite charities by making giving simple. And we provide charities with the tools they need to perform at their best. So together, we can make a bigger difference for our communities. We're a charity and a champion for better giving. We are CAF, and we make giving count. Visit cafonline.org to find out more.
People have always told me I can be a bit wary of modern things.
Very true.
So when Jane suggested selling the house with purple bricks, I weren't happy.
No, you weren't.
You see, I don't like technology. I don't like the internet. I don't like moving house. I don't like their adverts. I don't like purple.
Luckily, I don't listen to him, and our estate agent Emma were perfect. She gave us her actual mobile number. She was always available.
Fine, they were great. Still don't like purple.
Purple bricks. You'll be totally sold.
Fixed fee payable on instruction or after 10 months. Viewing services cost extra. See website for more details.
She did it! Her first word! Go on, say it again for Mummy.
Dada. Mama.
Oh.
Savings.
Did you hear that?
Savings account.
Teaching your kids how to save may not be this easy, but you can get them learning good habits and skills from an early age, thanks to the range of children's savings accounts from Yorkshire Building Society. Just another example of real help with real life. Find out more at ybs.co.uk.
From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and at TikTok on Twitter. This is Bloomberg Radio.
This is Bloomberg Daybreak Europe.
What we're now seeing for the first time is this facade of absolute unity beginning to break down in the EU.
We expect that there will be some type of slowdown recession beyond 2019.
The European banking system, although recovering, hasn't recovered, and there are areas of fragility.
We've seen this before, trade talks that lead nowhere, and then tariffs. We just swing from one to the other, and markets get caught in the middle.
Bloomberg Daybreak Europe with Anna Edwards and Matt Miller on Bloomberg Radio.
Good morning from Brussels this morning. I'm Anna Edwards.
And from Berlin, I'm Matt Miller. You're listening to Daybreak Europe on London DAB Digital Radio. Anna, before I get the latest lines from you on Brexit, I'll just look at the pound right now trading at 127.85. And a quick check of the data in terms of the equity indexes across Europe and in the UK. Bit of a mixed trade. We do see the FTSE gaining as the pound comes down. Right now up about 11 points, 71.79. We do see the CAC, however, falling about 7 or 8 points to 56.89. So not a lot of movement, but going in different directions right now. In terms of the safe haven bids, they don't seem to be out there. We see investors selling off treasuries. 174.83 is the level there. We see investors selling off the yen. You can now only buy 108.846 yen for $1, and investors are selling gold as well at 1488.36 a troy ounce. But each headline could change all of the numbers that you've just heard, right? And the direction of trade. What are we hearing right now from the DUP?
Right, so what we're hearing from the DUP this morning is that they cannot back the deal in its current form. So it's a no from the DUP. And this matters because the DUP would give Boris Johnson crucial votes back in the Houses of Parliament, back in the House of Commons, if we manage to get a deal here in Brussels that Boris Johnson wants to bring back. But he said he won't agree to anything that the DUP won't back. And so as a result, that they matter. The things they object to, customs in particular, they still have issues with the way that customs checks would take place. VAT, they say there's a lack of clarity there, and this is something that's only been added quite recently to the list of things that the many sides of the Brexit debate don't see eye to eye on. And consent is the other one, and that's interesting because overnight it seemed as if some progress had been made on the ability of the Northern Irish Assembly that sits at Stormont to weigh in and have its say on Brexit and to give its approval periodically every 4 years as to what it thought of the Brexit process. It seemed as if some progress had been made in finding common ground, but that seems to not be the case, or at least the DUP still have issues there. They are, though, on the upside, still in ongoing discussions with the government. So the DUP says no, not yet, but they are in discussions. So that's where we are. That's the state of play as far as the Brexit negotiations go here in Brussels. And we have just heard from Chancellor Merkel in Germany saying that they are open to the idea of an emergency summit taking place next week. This would be something that could be needed if there's just not enough time to get things done this week. If next week a summit could be arranged, but perhaps it's too early to talk about that. Jean-Claude Juncker's team talking this morning on Twitter about how every hour and minute counts before a deal, before the heads of state meet or the European Council representatives meet, and Jean-Claude Juncker's team saying we want a deal. And there is very much a sense that here in Brussels there is an appetite to get a deal done. It's just whether the DUP are feeling that heat or not.
All right, so there's a lot of moving parts there, and developments to come for sure. Let's bring in right now Marcus Ashworth. He's a Bloomberg Opinion columnist covering European markets now, but he spent the last 3 decades in the banking industry, most recently as chief market strategist for one of the big ones in the industry. Marcus, what do you think about this? I mean, it must be exciting for traders, but investors probably want to just sit tight until they get until the fat lady sings, so to speak, no?
I think most people feel, and you can see by the level of sterling up at near 128, that the bulk of the action is that the deal is going to get done somehow. At the moment, it looks to me the DUP are asking for the impossible, which is essentially their own veto on any change, because they feel that if the political landscape changes, as it may well do in the next few years, and all of a sudden they become a minority, and the nationalists can essentially keep, that is Sinn Féin, essentially can keep Northern Ireland in the European remit forever. And that's something which is very hard to give a section of society a permanent sort of veto over that. So the trouble is that therefore leads Boris Johnson in a situation whereby he's promised, as you said, to keep them going, keep with them, back with them, but the reality is that if the DUP don't allow him his hour of glory here, come an election when they are not needed as much, they will pay the price for it. So there's a lot of real politics to go on today. Investors, as you say, are probably thinking, well, we'll have to, unless we have to do something, we should watch and wait. But this is a perfect trading market. So there's a lot of hedging going on. There's a lot of speculation as far as what goes what and how. But I think most people, if you see where the level of sterling is, if there were not to be a deal and a true breakdown, then we would see a quite substantial fall in the pound.
Yeah, tell me about that hedging and the sort of time horizons that the market is working with here then, Marcus, because quite recently we started talking about how volatility wasn't priced in for the end of October. It was priced for November, December, when people thought elections might start to take place. And then the news changes and that moves again. So what does the pricing in the markets tell us about where volatility is expected to rear its head? I mean, we've seen enough over the last 24 hours, haven't we?
Well, yeah, I mean, these are the crunch points, and you're always going to expect a little of intraday. We saw it go up and down yesterday quite sharply. That's sort of by the by. I think really what we're looking forward to is that once, let's say, a deal does get done, sterling will rally, no doubt. But then you've got probably a second stage effect where people will suddenly have the reality that an election will be coming, and that is by no means a sure event. And we'll have probably a little bit of a sell-off in sterling as people regather and really plumb through what the reality of any deal that does get through means longer term, and we will have the trade talks to go on. We have an election to go through. We then have a possible change in the nature of how government is being run in the last decade, with a much more bigger turn to fiscal. So there's an awful lot for investors and the level of the pound to digest. Not all of it positive, and certainly not all of it negative. Therefore, there's an awful lot of shapeshift to go on. So, I just think that it's an active market. We know we've got trade talks in China and the US on the background going on as well. There's a chance for a double whammy here to remove two of the biggest bugbears, keeping markets down, and indeed bond yields much lower over the last few months or whatever. If they get taken away, then theoretically the whole bond market could have a shift much higher in yield. I doubt we'll get above, say, 1% in 10-year gilt yields, but we might get a test further up towards those levels if indeed we do get a deal. That risk safety factor slides away, and then indeed you get a possible big spending government, which means more gilt issuance. So there are definitely some things to take in mind. Whether that gets counterweighted with people coming in and putting money back in the UK, foreign direct investment, and in turn that gets parked in gilts, this is where the sands shift. No one quite knows where it's all going to settle out.
So I was talking to an FX trader about this at dinner last night, and I thought, this must be what you guys live for. This is great. And he said, normally, if you can get an edge, yes. But this is a situation where you're punting. It's a 50-50 thing. We were talking about, betting on the pound. What do you think?
Well, he's absolutely right, which means he doesn't have an edge, but other people may think they do, so they will. So this is the classic nature of trading, and you are two types of people. Either you've got people who have to hedge because they've got exposure, they'll put a stop loss or a stop profit or some form of barrier to protect where their overall net exposure lies, and or people who are speculating and see an edge here and see a change and reckon they can make a quick turn. So that is the market. It takes all types, and certainly when you get more volume breeds more volume, more volatility breeds more volatility, and that's, I think, is why we get this false calm we've had in some ways up till this particular summit, and I expect it will be a few days of rather wild and fun trading, hopefully.
Marcus, thank you very much. Bloomberg Opinions, Marcus Ashworth. And just to say, we're hearing from an EU official here in Brussels. No legal text on Brexit deal is yet available. EU official talking on the EU summit to reporters in Brussels.
All right, let's get the other global news headlines. For that, we go to Bloomberg's Leanne Gerrans. Leanne?
Good morning, Matt. Starting in Hong Kong, pro-democracy lawmakers have shouted down Chief Executive Carrie Lam for a second day. Bloomberg's Eric Lam has the latest.
About a dozen opposition lawmakers were dragged from the city's legislative council by security staff for raising noisy objections on Thursday. The ejected legislators shouted at Lam and waved signs that showed the chief executive with blood on her hands from recent violent protests in the financial hub. The pro-democracy bloc only makes up about a third of lawmakers, but the displays this week shows that they have the ability to delay or even shut down debate. In Hong Kong, Eric Lam, Bloomberg Daybreak Europe.
Elsewhere, US senators are pressing ahead with a bill in support of Hong Kong's pro-democracy movement. That's in defiance of China's threat of retaliation. The legislation would subject the city's special trading status to annual review. There is a broad agreement in both parties to show support for protesters and punish China for any crackdown. President Trump has been accused of a meltdown after US politicians condemned his decision to withdraw troops from Syria. Senior Democrat Nancy Nancy Pelosi walked out of a meeting with Trump, accusing him of failing to deal with the crisis there.
You kind of engaged in a meltdown, and we were trying to get the answer. What is your clear plan that this resolution asked for how we fight ISIS? It was very sad.
Donald Trump responded on Twitter calling Pelosi unhinged. U.S. Vice President Mike Pence and Secretary of State Mike Pompeo holding talks with Turkish officials later about their offensive against Kurdish militias, which has been widely criticized. And climate change protesters have been arrested as they disrupted train services across London this morning. Angry commuters have been seen pulling a campaigner from the top of a tube train at Canning Town Station. There have also been problems at Stratford and Shadwell. Global News, 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Anna.
Thanks very much, Leanne. Now with your morning sports news, here's George Aldwin.
Liverpool forward Rhian Brewster believes racism will only be eradicated from football once tougher punishments are handed out to teams. 6 Bulgarian fans have been arrested after England's players were racially abused during Monday's Euro 2020 qualifier in Sofia. Brewster has also been subjected to similar abuse while playing international football at youth level. He tells Sky Sports News there's one solution he believes will make it stop.
Drop the team out of the competition. It will stop soon because you're going to want to watch your team or your country in the tournament. So if you drop them for a year, they ain't going to do it again. I promise you that. And if they do, ban them for longer.
Manchester City's progress in the Women's Champions League is in the balance. They were held to a 1-1 draw in the first leg of their last 16 tie with Atletico Madrid last night. But Arsenal are looking good to make the quarter-finals after winning 5-2 away against Slavia Prague. And Andy Murray's in second-round action at the European Open in Antwerp this evening. The former world tennis number 1 takes on Uruguay's Pablo Cuevas as he continues his return from career-saving hip surgery.
Let's get the U.S. sports now. For that, we go to Pete Fox. Pete?
So in San Jose last night, Evander Kane did something for the Sharks I'm not sure I've seen before. 3 goals, all in one period. The first, they call it a hyper hat trick, leading the Sharks to a 5-2 win over the Canes. In D.C., the Capitals get their first home win, edging the Leafs by a score of 4-3. On the NBA preseason hardwood in L.A., Lakers all over the Warriors, 126-93. D'Angelo Russell with 23 for Golden State. LeBron had 18. And in New York at Madison Square Garden, the Hawks edging the Knicks 196. Julius Randle with 20. Trae Young led Atlanta with 23. I'm Pete Fox. That's your Bloomberg NBC World Sports Update.
Pete, thanks very much for that. Now, still ahead on Bloomberg Daybreak Europe, is a recession really just one mistake away? That's the opinion of Bloomberg Daniel Moss. He says the past decade's cooperation between central banks could be on the ropes here. And you can listen back, by the way, to a selection of our interviews at BloombergRadio.com or on your Bloomberg Business app on your mobile device as well. This is Bloomberg.
The lifeblood of tech startups isn't just money. It's executive and technical skills, the kind of skills that companies need to build real products. And the skills that venture capitalist Chris Sugden of Edison Partners sees in the graduates that are coming out of New Jersey Institute of Technology.
The amazing thing about NJIT is their graduates, they have multiple offers on average, not just one. They're coming out with real skill sets that are immediately hireable and available to them. I think we see an understanding by the faculty and administration at NJIT that we've got to train and educate the whole student, not just their, one side of their brain. And I do think that's sort of part of the DNA today. There's practical and there's sort of academia, and merging those two together and understanding that if we're going to have our young people go get great jobs and have great successful careers, they've got to have both sides of their brain activated. And I think we see that with NJIT.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Are you one of those people who thinks it's okay to drive stoned? I mean, what's the worst that can happen? You end up driving below the speed limit? It's no big deal, right? Wrong. The truth is, your reaction times slow way down when you're high. You not only put yourself in danger, but everyone around you. Talk about a buzzkill. Stop kidding yourself. It's not okay to drive high. If you've been using marijuana in any form, do not get behind the wheel. If you feel different, you drive different. Drive high, get a DUI. Paid for by NHTSA.
If you
love them enough to listen to them practice the same song on tuba.
Please be done.
Over and over and over and over and over. Then surely you'll check nhtsa.gov/the right seat to make sure they're correctly buckled in the back seat.
Sounds good, honey.
Check today at nhtsa.gov/the right seat. Brought to you by the National Highway Traffic Safety Administration and the Ad Council.
Influential conversations from Bloomberg Television. Here's Taylor Riggs.
One such company that may have its eyes on a public debut is Snowflake. It sells a cloud-based data warehouse service that helps organizations such as Netflix store and analyze information. And it's valued at under $4 billion. Joining me from New York is the CEO of Snowflake, Frank Slootman. So, Frank, how does the IPO market feel to you right now? Is it healthy because companies are getting shaken up if they're not profitable, or is it too volatile?
No, I think it's actually healthy. I mean, there should be a high bar. It felt to me too euphoric for a period of time. I'd rather have investors be critical, be testy, and really examine companies so that when they come to market, you know, the public can really have the confidence these are real companies with real velocity, real momentum. They're viable. You know, they have been properly vetted, right? There's nothing worse than companies coming to market, you know, falling apart after an IPO. That's not good for anybody.
How has the environment affected Snowflake's plans to go public?
Well, it hasn't affected it at all. You know, we're focused on running our business. We're preparing the company to go public, and you know, we'll find our window. You know, whenever that comes, we'll pull that trigger and go. You know, an IPO is a milestone, but you know, life continues on. You know, right after. So you know, we don't get too excited about it.
Hear more interviews like this one on Bloomberg Television, streaming live on Bloomberg.com and on the Bloomberg mobile app, or check your local cable listings.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at TikTok on Twitter. This is a Bloomberg Business Flash.
From Bloomberg's European headquarters here in London, I'm Caroline Hepker with this Bloomberg Radio Business Flash. So European stocks right now are flat. Sales of ice cream and tea held back growth at Unilever, but their shares are up by 1.3% this morning as we get a slew of results. Ericsson, for example, its gross margin beat estimates, so the share price currently higher 6%. And Nestle also announced a buyback earlier. So if you recall, the US stock 600 closed earlier this week, but as I say, this morning we're fairly flat. Meanwhile, the FTSE 100 is up 0.4% as the pound retreats. The UK building supply firm Grafton drops as much as 14% after a profit warning. Looking ahead to the US Open, S&P 500 futures up 0.1%. As for the bond markets, Treasury yields continue to tick lower after those US retail sales unexpectedly fell for the first time since February. That data out yesterday. That lifted Fed rate cut bets. European bonds have also been tracking the US moves. 1.74% for US benchmark yields and negative 38 basis points for German Bund yields. Oil up sharply amid a rise in US stockpiles, according to API. So currently WTI trades at $53.03, so down 0.6% this morning. Sterling, as I mentioned, also declining. The pound on cable 127.82, weaker 0.4% as the DUP casts a doubt over whether Johnson can secure the Brexit deal that he is trying to do with the EU right now. That is a Bloomberg Business Flash. Now here's Leanne Gaines with more on what's going on around the world. Good morning.
Good morning, Caroline. Italian President Sergio Mattarella has condemned Turkey's attack on Syria. Mattarella, who spoke at length with President Trump on Wednesday, said the US is a crucial ally for Italy, along with the European Union. Both the leaders pledged to boost trade and relations. Spanish Prime Minister Pedro Sanchez is pledging to stand firm after 3 days of clashes between police and protesters in Catalonia. Demonstrators returned to the streets to demand the release of separatist leaders jailed for last year's independence referendum. Authorities are also said to be considering moving the venue for the upcoming football match between Barcelona and Real Madrid. And Christian Dior is the latest company to face a backlash in China over political sensitivities. This after making a presentation at a university that that included a map of the country that excluded Taiwan. The French luxury brand has apologized on Weibo after a video clip circulated online of a student challenging a Dior worker over the missing country. Global news 24 hours a day on air and at TikTok on Twitter. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
Bloomberg Opinion, informed perspectives, and expert data-driven commentary on breaking news.
It is 9:20 in the City of London, 10:20 in Berlin and Brussels, where Matt and I find ourselves this morning. Time to check in with Bloomberg Opinion, and we're joined by opinion columnist Daniel Moss, who's been writing about how he believes we could be one mistake away from a global recession. Daniel, good morning to you. What's your argument here?
This is really about 2009 analogies, and every time the IMF does its forecasting, 2009 analogies proliferate. Tuesday, the IMF cut its global growth forecast. Now, this is about the fourth time in the past 12 months this has happened. Every time it happens, people say, wow, these forecasts are the lowest since 2009, which, as we all remember, was part of a horrific period in economic history. That's where the analogies start to break down. In 2009, the global economy shrank. We're talking about more than a recession. We're talking about a contraction. We are a long way from that. And the reason that we're a long way from that, in part, is because those much maligned central bankers, you know, those ones who run out of ammunition, are doing the right thing, doing it early, and doing it simultaneously.
So are you expecting the central bankers to continue to work together? It certainly looks fairly concerted, as I guess, I don't know if that's the way to use the verb, in concert. Do you expect that to break down?
It's not a bad word to use, Matt. And Geeta Gopinath, the IMF chief economist, used the word simultaneous, or derivatives of that, a couple of times in her press conference. Compare this, Matt, with the 2007 to 2009 period. We all remember the coordinated central bank actions, but they happened really in the second half of that period, through 2007 and certainly up until October 2008. World central banks were kind of all over the shop. Now, if it weren't for the central bank actions we've seen thus far this year, this global growth forecast, according to the IMF, and I believe them on this, would be down around 2.5%. Why does that matter? That's your global recession right there. 2.5% global GDP is an IMF definition of global recession. So,
Daniel, we seem to be struggling slightly with your...
we've had.
Yes, we seem to be struggling slightly with your line, but we'll persevere just briefly. Where does any fiscal boost fit into this? Clearly, you're suggesting then that thanks to some coordination, we may avoid a global recession. What about the fiscal forces at work?
There's a lot for fiscal policy to do here. Because fiscal policy is more intimately involved in the political systems, the legislatures, the cabinet decision-making of countries, this is a trickier thing to pull off effectively, and it's even trickier to act in concert in the absence of a crisis that's staring you right in the face. Since 2009, we've seen the global appetite for government cooperation really break down. The previous item on the news was all about the latest Brexit developments. You've got Trump, you've got China, you've got a bunch of other things. You've got Japan and Korea having their own little sideshow spat. Getting governments to work together today is devilishly tricky. Thank God for those central bankers. But in terms of fiscal policy and regulatory policy and trade policy, we're one step away from a global recession.
All right, Dan Moss there from Bloomberg Opinion. You can get his story on the Bloomberg, type OPIN GO, and there's a great opinion section on the Bloomberg website as well at Bloomberg.com. Bloomberg.com. Now, straight ahead, we're going to talk a little bit about one of those events that Daniel was highlighting. Turkey's military push into Syria has sparked fears in Greece of a new wave of migration to Europe. Earlier this week, the incursion also prompted EU leaders to curb arms exports to the country. This is
with the Bloomberg Business of Sports Report. I'm Michael Barr. Major League Baseball is now allowing investment funds to take minority stakes in multiple clubs, a move that lets the league capitalize on sky-high team valuations. Traditionally, baseball owners have been wealthy individuals, but the new policy could bring in cash from Wall Street firms and college endowments, according to the people familiar with the change. It's MLB's answer to a problem affecting all the major U.S. sports leagues. Teams' multi-billion-dollar valuations have made it difficult for part owners to find buyers for their stakes when it's time to sell. IndyCar turned laps at a Richmond Raceway for the first time in a decade.